Hi everyone, welcome to my channel. I'm Doris. I'm here to share with you about my stock account and today's market updates. Today let's talk about the US stock market. It has closed down on Thursday after the Nasdaq fell into a correction zone and has continued to decline. The Treasury yields were lower on Thursday, with the 2-year yield falling for 8.2 basis points to 5.039%. The yield on the 10-year Treasury note fell 10.9 basis points to 4.843. The yield on the 30-year Treasury note fell 10.4 basis points to 4.986. The B Bank said Treasury issuance is likely to reach a record high in 2024 as higher interest rates exacerbates the U.S. government deficit, which could mean upside for Treasury yields. Investors continue to watch U.S. earnings. Misvalues by big U.S. tech companies sparked stock market turmoil, prompting investors to think their ultra-high valuations in the context of rising Treasury yields. Alphabet closed down 2.55% on Thursday. The company reported on Wednesday that revenue from its Google Cloud division was below analysts' expectations, disappointing investors and causing its Class A shares closing down 9.5% on Wednesday, suffering its biggest one-day drop since March 2020. Facebook parent company Meta Platform beat both revenue and earnings expectations, but noted signs of weakness in advertising so far in the quarter. Investors were also concerned about the company's cost control issuance, as its Reality Labs division lost $3.7 billion in the previous quarter. On the economic data front on Thursday, the Commerce Department reported that GDP grew at 4.9% in the 3 months to December, the biggest pace since its fourth quarter of 2021, up from 2.1% in the previous quarter and a 4.3% increase expected. The data suggests that the U.S. economy grew faster than expected in the third quarter, the fastest in nearly 2 years, and is the latest sign of resilience in a high interest rate environment. Analysts say strong GDP growth data could prompt the Fed to raise interest rates at next week's meeting to deal with persistently high inflation. Growth is likely to slow in the fourth quarter due to the UAW strike and millions of Americans resuming pay off student loans. Most economists have revised their forecasts, believing that the Fed can give the economy a soft landing. Financial markets expect the Fed to leave interest rates unchanged in November. Separate data from the Commerce Department on Thursday showed that real personal consumption spending in the third quarter is the highest since the second quarter of 2021, expected 4% and 0.8% last. The core PCE data hit an annualized rate of 2.4% in the third quarter, the lowest since the first quarter of 2021. The Commerce Department also reported that the U.S. durable goods orders rose more than expected in September after 2 consecutive months of declines, suggesting the outlook for U.S. manufacturing is improving. Durable goods orders rose at 4.7% month-on-month and above an expectation of 1.7%. The Labor Department reported that initial U.S. jobless claims last week were at 210,000 versus 208,000 expected. These economic data show that a strong performance in the U.S. economy, although there have been some expectations in the Wall Street expecting a recession, and as well as some pessimistic sentiment in the market right now that has been causing the Nasdaq to play downward. Right now, we're still waiting for the S&P 500 companies to release all of its earnings, and overseas, the ECB on Thursday left its 3 major interest rates unchanged after a rate hike of 450 basis points. This is all I have for today. Thank you for listening. Don't forget to subscribe. I'll see you next episode.